Time for a look now at Africa's super rich. In its latest edition of the Wealth Report, Knight Frank estimates that there are just over 4,500 Africans across the continent with a net worth of over $30 million. And of course, we're putting all the dollar billionaires into that category. Now, compare that to North America's figure of 249,000, Asia's 103,000, and Europe's figure of nearly 111,000. The firm, however, estimates that between 2019 and 2024, Africa will have the second highest growth of this category of individuals at 32%, beaten only by the Asian region. Now, Egypt and Tanzania are among the top 10 countries forecast to create persons with a net worth of at least $30 million in the next 5 years. In its latest assessment of the investment patterns of high net worth individuals, the agency estimates that the number of persons, of ultra high net worth persons rather, will rise by at least 2/3 in Egypt, 54% in Tanzania. The other African countries in its rankings include South Africa, Uganda, Zambia, Kenya, and Nigeria. But what exactly will drive the rise of more high net worth individuals in these countries, despite all the macroeconomic problems, which we've reported on here several times before? That's a question I put to Andrew Shirley. He's the editor of the 2020 Wealth Report.
Well, to start off, we're looking at a 5-year forecast, so we're not looking at anything too short term. So we're looking to the longer view, and we would anticipate that economies in these countries will be picking up where they've been sluggish of late. But I think you can't ignore that demographic picture. You can't ignore, the increase in the number of young people full of enthusiasm, full of entrepreneurship. So I think it's very easy to take a pessimistic view on Africa. But your middle class is forecast to rise massively. They're going to be increasingly big consumers of things that need to be created, of services, of goods. So I think the long-term picture, even if there are short-term issues, is still positive.
What about Egypt? Because it's one of the countries that you're forecasting to actually have the fastest growth. I think the only one that eclipses it is India. What is it about Egypt that makes it particularly prime for that sort of growth, for high net worth persons?
Well, I think we have to look back a few years and we look at the failed Arab Spring. Everyone had these great hopes for Egypt when they had a new government and so forth, but it just didn't transpire. But now they seem to have got things more in order. So I think this very high level of growth is more of a reflection of this slow base that they're coming off, rather than the fact that their economy has been growing for a long period. It hasn't. So this is actually just Egypt playing catch up.
Walk me through the typical portfolio that these high net worth individuals have, generally speaking, and I know I'm asking you to cover a lot of ground here, but generally speaking in Africa, vis-a-vis other parts of the world, is it mostly the same generic mix that we see of property, equities and bonds, or is there something different from one country to the next in Africa?
There's a love of tangible assets in Africa, more so perhaps in other parts of the world, which is why we see that property accounts for a much higher proportion of investment portfolios within Kenya. Stock markets are perhaps less mature here, so perhaps people feel less confident about putting so much of their money into a stock market. They're much happier to put it into their properties. But one of the interesting things about our attitude survey this year was that they revealed that in terms of ultra high net worth individuals, the wealth advisors who took the survey report that we have a much higher proportion of wealth being created by Gen Zers and millennials in Kenya compared with other parts of the world.
The asset classes that people are trying to invest in are somewhat different. It's especially on Gen Zs and millennials. More interest in private equity, more interest in venture capital. What are you seeing in those trends in Kenya?
I think it actually makes sense in Kenya where you look at where wealth is being created. It's being created in these new sectors, in fintech, in new ways to transfer your money, new ways to manage your money. So it seems understandable that this new generation of people who want to do things differently from their parents are taking advantage of that. I mean, we're in the sharing economy now. People don't value owning things like houses or record collections as much as their parents did. They want to invest money in more exciting things that have the potential, perhaps a little bit riskier, the potential for higher levels of growth.
What is it about these individuals that makes them averse to property? Is it just a generational attitude, an attitude change from one generation to the next, or is it that they're looking at the property assets available and they're saying, well, I can get better returns elsewhere, so why would I want to lock up my money in land or property?
I don't think it's that they're particularly averse to property, but one of the interesting people I interview in the report are guy called Professor Andrew Scott has written a book called The 100-Year Life, and it points out that people are living much longer. My kids in the UK will probably on average live to 100. So people have a lot longer to decide the course of their lives. So people don't need to lock up money in a property quite so quickly. They can look at different ways of wealth. They can make a few mistakes along the way. But I'm sure once they get older, once they have children, once they become older Generation Xers like me, that's when they'll start putting down more roots, and perhaps that's when they will start investing in property. So I'm not worried that Knight Frank is not going to have anybody buying property in the future. It's just people are taking longer to make up their minds where they want to put down their roots.